Good morning and welcome to Saxo Bank's Morning Call. It's Tuesday, the 4th of September, and I'm joined today with my colleague Hansen on commodities. But if we dive directly into markets, the big reaction we're seeing overnight here in Asia is Chinese equities up almost 2%, and it corresponds directly linked to an RBA comment where the RBA is sounding way more upbeat on the Australian economy. And we know the Australian economy is a proxy for what's going on in China, probably from traders and investors. There's more confidence in what what Australia communicates and what China communicates on the economy. So I think that's a positive. Obviously, there are other factors playing into the Chinese equity market rebound, but I'll talk about that in a few seconds. Then also, you'll be talking today about what's going on in oil. There's a two-way battle, right?
Yeah, that's true. We just seen the latest survey from Bloomberg, which basically highlights that even though we're seeing a slowdown in production from Iran due to sanctions, we are seeing production increasing elsewhere, and that together with the potential announcement of additional tariffs on Thursday by Trump, I think is keeping the upside capped at this stage. But we're going to take a look at the chart later.
Yeah, and we will talk more about the trade war, the new additional tariffs, because that's the key risk that will come into the market later this week. Yeah. But let's go to Chinese equities. If you look at the chart, we can see here that we have now had a couple of weeks since the low point in Chinese equities, and we're now firmly higher. We're almost up 2% in the CSI 300 index futures. But as I said last week when we did the morning call shows, for me the big worry is still the trade war. So Trump has announced that there will be additional $200 billion of tariffs if there is no progression in the trade talks. And it doesn't seem like from the indications from the Washington trade deal talks that there's any progression. So I think it's almost likely that we will have an additional tariffs.
Yeah, and it looks like it's going to be a big one. Potentially $200 billion worth of imports is going to be surcharged, and I think it's something like 6,000 different items. Yeah. And even though, as Peter mentioned, we've seen the stock market stabilize in China, if you look at something like copper, which is really one of the gauges for this tariff impact, it's actually trading low again today. Soybeans in the US has recovered a little bit, but these are really the two major commodities we'll keep an eye on because, again, tariffs, and it's the whole story about whether it's going to have a negative impact on growth into 2019.
Exactly. So as I said last week, I think the main point here is that to not be too aggressive moving into Chinese equities. I think it's important to accept the fact that there is a pretty high probability that we could take another leg down in Chinese equities, despite the chart is looking better. If we just zoom in on the Australian dollar, we can see here the Australian dollar is gaining a little bit. So that you talked about it yesterday on the morning call that the Aussie was declining against the dollar, but it's seeing a rebound today. And as you can see on the chart, we now have a triple bottom formation actually. So very important technical levels that we are seeing in the Aussie dollar here. The RBA is sounding quite upbeat. I think the slide we've seen in the Australian dollar is directly linked to China. So China is weak. If that stimulus from the monetary and fiscal side can come into the Chinese economy, then obviously it will lift the Australian dollar as well. So if you're looking in for equities, then you could potentially looking for a double gain here, with both gaining on the currency and gaining on the equity part if we get that boost from China.
And obviously we need to say also at this stage where it's almost a given that we're going to have the sanctions announced on Thursday, then there could be a positive surprise as well. So potentially we have most of the bad news priced into the Aussie dollar already.
Exactly. But oil, it's a lot is going on in oil right now, especially in Iran. The sanctions has not even put in place, but it's already having an impact.
Yeah, we've come a long way since the last month or so. We've had quite a strong rally in crude oil. That rally seems now to be running a bit out of steam. And if you just look at the chart here, you can see one of the reasons why. Surveys, this one is carried out by Bloomberg, basically highlights the production increase that we've seen now for the past few months. You can see that for the total OPEC group, it's now above the production ceiling that they agreed to a couple of years ago. And the big culprit for the slowdown is Iran. But against that, we're actually seeing increase in production from most other members. I think last month the biggest jumper was Iran, which was Libya, which was really the comeback kit. More than 300,000 barrels that they managed to increase production by. But you can see there Iran in the middle. They are already starting to hurt. That the problem a little bit longer term is if this is going to be enough, it's probably not. There are speculations that Iran's production could drop by as much as 1 million barrels. So far we've seen potentially a quarter of that. But so far production, OPEC is responding, and that's their increase in production. And that's basically leading us to the next chart. If you look at Brent crude here, you can see we have been in this channel now since May, and we basically hit the upper part of that channel yesterday. So that's around the 78 area. I think at this stage, with the U.S. tariffs potentially coming on Thursday, with this rise we've seen in production, we may start to see the market struggle a little bit here and potentially settle into this range here between 75 and 78.5.
But isn't it quite fascinating? So I remember quite clearly that 2 weeks ago we were sitting in the same studio and we were talking about the Brent crude could actually dip even lower. So we were talking about this, was it 71, 72 level, and now we're at almost 78, and it's a complete reversal of the story we had just 2 weeks ago.
And that's how the market really is very theme-based, because just a few weeks ago, probably a month ago, the focus was really on trade wars. It was on the weakness we saw in the emerging market currencies and the potential impact that was going to have on growth. So the market was starting to worry about the growth and therefore also demand for crude oil. Since then, we had seen these signs of Iranian production starting to slow, and that's really turned the focus back to supply. So we've had this alternating focus between demand and supply, and that's what's really driving the market. But overall, we can see we are in a range, and for that, I think we're going to stay within that range.
All right. Yeah, and for compliance reasons, we just have to zoom in on a long-term chart here on the oil futures.
And that also gives us the idea about how we've been relatively stable now for the past few months.
Yeah. Okay, so before we wrap it up, let's talk about the macro events here. So today at 09:30, we have the Euro area PPI for July expected to climb 0.3 percentage point from its June print. So definitely through the producers are coming a lot of price pressure here. So when it filters into the CPI, we'll have to see. But it seems like some inflation is coming now in more and more countries. At 13:30, if we'll go back to the slide, we can see that we have the Canadian manufacturing PMI, obviously important for the Canadian currency. We have the ISM manufacturing PMI in August. And then I put in not a very followed macro number, but I could actually see in the Bloomberg terminal that it has a high relevance today. So people are watching that Argentina industrial production from July, and it's expected to decline 6%. And then looking into the week, I think the Wednesday's U.S. trade balance data, obviously very important, and could be that gate into Thursday where Trump probably could announce the $200 billion in tariffs.
And I think if we just jump to Sunday, we got the election coming up in Sweden. It looks like it could be one that potentially could change the political landscape. The Swedish krona has been under pressure now for the past few months. On that basis, we're going to have an election special this afternoon. It will be recorded, and also we're aiming to show it live. And there will also be some reports on our site, home.saxo. And tomorrow we'll be joined by one of our option traders who will be looking at the option markets on Swedish krona.
Thank you, Ole. And with that, it concludes our morning call. And thank you for listening. And we'll be back at the same time and place tomorrow. Thank you.